Hi, welcome to Market Alert for Monday, the 11th of January 2015. And on the overnight, the markets continue to move lower. Just drag the chart over here. You can see that's in China. The US finding a bit of support there, bringing the market back up 100 points, and now coming off slightly as the rest of the Western world starts to wake up. You can see they're gapping up, moving lower, and then moving back up there. In the session from Friday, the volatility too great to show any signals in the chart there, and even in the quieter part we can see the market not giving any signals. And in fact, as I've noted before, in August when we had the same situation, the pre-market session, because the range of these bars is pretty much the same as it would be in a normal session in the main part of the session. So in the earlier part, pre-market session, when the volatility is too great in the main session, and the reason for that is quite simple. A lot more players come to the party in the 2:30 to 4:30 session, creates a wider range in bars, whereas in the pre-market session, of course, most traders are still asleep on the east coast of America, and this is why you're seeing this type of activity here. So between sort of an hour, 2 hours before the main event, the market will be quite busy, and also after the main European markets open. So you can see there you've got 6 a.m. the market being moved higher. There's a loser there. This one is still long from this signal, and then as we get into 9:30, you can see there it's straight down, and then just before the market's moving back again. That's the non-farm payroll figures, which of course you wouldn't be in anyway, but just goes to show there that the volatility we're seeing in the pre-market session is similar to that we get normally in the main session. Of course, we're going to get the one signal there, which is just before the main close, and seeing the market move sharply lower for the remainder of the session for half an hour. So what to do? Personally, I'd prefer to keep the range at the moment of the bars to the 8 and 25, and look at possibly the earlier part of the session. But again, we should see the market starting to calm. If you look at the daily chart, you can see there, even though the Shanghai market is losing again ground on their day session, and the Chinese government also having removed the 7% circuit breaker now as well, according to the BBC. The market's holding up well, but I would expect the 16,000 and also the 15,900 to be tested at some point. In the weekly chart, just have a look at a bigger picture. You can see last week market moving sharply lower. Is the August low, so we've got to take out these lows as well, which we can see marked up here. So again, the 16,000 is very important, and there's still downside pressure. That doesn't mean say you're not going to get up days. We've had quite a few straight days to the downside. We will see some form of bounce back to the upside as well. And news-wise today, what have we got? No news today, so the market's going to have to make its own mind up which direction. And again, no doubt using Chinese market to take its cue initially, which we've seen, but at the moment finding some support there. And then finally on the implied volatility, 21.51, not as high as I thought it would be, but still moving to the upside, still another 3 or 4% before the implied doubles to show a market bottom. So we need some sort of a sharper move to the downside, some volatility to find support at the lows that we've just looked at before this market could see any form of a retracement. So let's have a look at Shanghai, see what it's doing at the moment. Down 123, down 3%, heading back to that very important 3,000 level. That's what you want to look at. We just go to 1 year so you can see it. This is August lows. For those of you that are new, this is the area where the market is going to be very interesting. Close below this, we'll see the market move lower, and as Zero Edge points out, 1.8 trillion Narimbi was pumped into the market to keep it alive through June to November. You can see the effect was absolutely pointless, and I said that at the time. Any government that's pumping money into the markets, eventually the markets will unravel, the same as they are in the US, and they will globally, because eventually they have to find their fair value. It's too overvalued. There are bubbles galore, and they need to be burst, and the market to find its own levels. The too big to fail syndrome, unfortunately, is pervasive now in all markets and in all parts of society as well. So again, eventually the balance will be found through the usual means, and that is big sell-offs and everything else, until the governments stand aside like they have done now in China. They're not taking part in pumping money into the market. The market's bigger than any government. They're just wasting the time, unless of course in the US you print 4 trillion and try and hold the market for 7 years, which they've done, but again, that part is coming to an end as well. Right, that's it. I will see you in tomorrow's edition. Hopefully we'll get a modest amount of volatility today, give us a few trades with the current settings. But there's, say, in the pre-market session, the volatility has been, and I say has been, quite nice, but fairly quiet this morning. So very difficult just to try and balance this. But again, we do get to these reprieves, and as I've always said, I'd rather have no trades than 5 or 6 consecutive losing trades. It's as simple as that. Right, I will see you in tomorrow's. Have a great day, and as ever, thank you for your support and also for watching. See you in the next one.